Good morning and welcome to today live trading section. Right? If this is your first time of seeing me, my name is Vetexx, and what I do on this channel is we go live every morning from 6 a.m. to 7 a.m. analyzing the synthetic market using pure technical analysis and price action. Okay, so all you have to do, pay close attention to the analysis I'm going to be doing today, and if you're watching this video, comment where you're watching from, and don't forget to like, subscribe, and most importantly, join our Telegram channel so that whenever we post update on the channel, you can easily follow. Okay, so every day 6 a.m. to 7 a.m. All right, depending on your country time, we analyze the synthetic market step by step and I basically show you how I trade, how I analyze the market, and how you can get values from what I do here. Right. So what I'm going to do next is I'm going to be sharing my screen with you all so that you'll be able to see and follow me during the analysis. If you have any question, don't forget to drop your question in the comment section and I'll do well to answer all of that. All right. So let's go. I'll be sharing my screen right now and pay close attention to it. So basically, on this channel, we analyze basically on just the synthetic uh, indices. Okay. Now, first of all, from doing top-down analysis on those pair, okay, we'll be able to know where the price is always coming from and where it's going to. So basically, on these synthetic indices, we analyze just the volatility indices and the analyze just the volatility indices and the step indices at the moment. Okay, as time goes on, we'll be able to incorporate something like the jump indices, boom and crash. Okay, so this is just the starting point. So at this point right now, I'm going to be analyzing up to 11 volatility indices and 5 step indices. Okay, now I'm going to be showing you step by step how I do my analysis. So if you pay close attention or you've been following me for a while, you'll be able to understand everything I used to explain on here. Okay, so first of all, I'm going to be checking our watch list. Okay, if you check our watch list, we have about 1 up to 14 pairs that we analyze every day. Okay, look out for quality setup. So on this quality setup, we'll be able to get exactly what we are looking for every day. Okay, because we don't just trade by just how we feel, but we just trade using pure technical analysis and top-down analysis. I know a lot of you watching right now, you might not get it when somebody say top-down analysis. It's basically when you are looking for a directional bias on a pair, where price is coming from and where it's going to. Okay, you need to have a direction on the trend. You cannot be selling a particular pair when on the higher time frame it is bullish. Okay, so this is when top down analysis come into play. Okay, it helps you to get a clearer direction of where price is coming from and where it's going to. And if you're having any confusion at the course of my analysis, okay, all you have to do is to go to the watch list of this channel and you'll see where I wrote advanced market structure. And then when you this, there are a whole lot of videos that break down everything I do on this daily life analysis for you. So once you watch it and you're having any confusion, you can always drop your comment in the comment and then you can always message me on Telegram directly. The link to my Telegram is on the description of this video and it's also on my bio. So go to let's go to the first pair on my list today. First pair on my list is volatility 25. So I'm going to be showing you the pattern, the system that we trade every day, so that when you are watching, when you want to do your own analysis, it will be easier for you to get the clearer picture of what you are doing, and then a solid understanding of, okay, this is what I have to do every day. And if you follow this step, I promise you, you are going to this is going to make a whole lot of changes to your trading system. Okay, depending on any type of system you're trading, just approach the market in this way, and it's going to definitely help you. So, first of all, this is the system we trade. It's called the advanced market structure. Okay, we trade a system called advanced market structure. So, first of all, we have a price making what they call a higher high, higher low. Okay, but first of all, we have this. Okay, and then we have this high here. Okay, so we have a move like this. Now this high at this point becomes our what? Our liquidity, and we want price to sweep it. So because after that we want price to sweep it. Now on this advanced market structure, there are 5 rules that guide it. So the first of the 5 rules is this. This is rule number one. This sweep here, this high here need to be taken out. Now we consider this as liquidity. This top here, we consider it as liquidity, and now price need to sweep it. Okay, which is rule number one. Price need to sweep. uh there must be a sweep of liquidity. Now this high here has been swept by this. Okay, we now have what? Sweep of liquidity. After the sweep of liquidity, price give us a protected high. Then the rule number two, there must be a second a first break of structure. Now this low here, newly created low, need to be taken out to have our first break of structure. Now this becomes our first break of structure. Now this is our second rule. And the third rule, the price must retrace 50% to give us what? Structural liquidity. Now this liquidity is our rule number three. Okay, and rule number four, price needs to take out this newly created low, which is our second break of structure. Now price will retrace back, take it out to become our fourth row. Okay, so now price has taken it out. This is our second break of structure. Now remember, this is our first sweep of liquidity. There must be a sweep of liquidity. Price must retrace back to give us our first break of structure. After the first break of structure, price must give us our what? Must retrace 50% to give us structural liquidity, and price must retrace back to take out the newly created low, which is this. And then we have this. Now the rule number five is price must take out this newly created high, which is our structural liquidity. Now this liquidity used for what? Continuation. So once price take this out, tap into our point of interest, price will continue to the opposite direction, which is going to be this. So this is basically what we look at for every day in the market. We look at for this on the higher time frame, and then we'll scale to the lower time frame for continuation. And look at first sweep of, there must be a sweep of liquidity, which is this, and then there must be this is our first break of structure, which is rule number two. Rule number three, there must be a 50% retracement to give us our structural liquidity. Rule number four, price must retrace back to take out the newly created low to give us our second break of structure, which it is. And then this becomes our what? Point of interest. This zone right here becomes our what? Point of interest. Now this point of interest, price will take out this newly created high, which is our structural liquidity used for continuation, and continue to the opposite direction. So this is basically it. So this is our entry point here, and then we have our take profit level at this point. So this is basically it. So this we look at for when we want to buy is the same thing we look at for whenever we want to sell. Okay, we look at for this when we want to sell. It's still the same thing we look at for when we want to buy. So on the higher time frame, take for example, you have a this continuation, this time frame directional bias. Now let's say this is on the 24-hour time frame. Okay, let's say we have 24. These are 24-hour time frame. Okay, This 24-hour time frame, once we see this type of structure on the 24-hour time frame, the next thing for us to do is to scale down to the 4-hour time frame. All right. We'll scale down to the 4-hour time frame. When we scale down to the 4-hour time frame, we'll still look out for this continuation on the 15 minutes time frame. Now it's from the 15 minutes time frame or 30 minutes time frame that we'll start executing on those pairs. Okay. Now let's this is our remember first of all we have to see this on the 24-hour time frame. Okay, when we see this continuation of this pattern on the 24-hour time frame or on the weekly time frame, we'll scale down to the 4-hour time frame. Okay, when we scale down to the 4-hour time frame to see where price is coming from and where it's going to. Okay, we'll then scale down to the 15 minutes time frame. Now on this 15 minutes time frame, that is when we can start executing on this trade. Okay, so on the 15 minutes time frame, when price comes into your POI, you look out for your confirmation entry and take the trade. Now this point becomes your take profit level, and this point is your stop loss level. Okay, so in this case whereby you don't see this pattern on the 24-hour time frame, but you spot it on the 4-hour time frame, and let's say the trend is bearish, and you spot this bearish pattern on the 4-hour time frame, you can easily go down to your 15 minutes time frame and look for your entry so that you can take continuation on the trade. Or but should in case that you see this time frame on the should in case you see this spot this pattern on the 24-hour time frame, okay, you have to wait for it to give you this same pattern on the 4-hour time frame or on the 1-hour time frame before you can scale down to 15 before you can scale down to your 15 minutes time frame. Okay, so this is basically the whole idea behind this advanced market structure. Okay, you spot this pattern on the higher time frame, you come down to your hourly time frame. Let's say you spot it on the 24-hour time frame, which is the daily time frame, on the weekly time frame. Okay, you don't have to scale to the lower time frame yet. You have to wait for it to give you this same continuation, this pattern on the 4-hour time frame. Okay, and then you can scale to your 15 minutes, 10 minutes, or 1 hour or 30 minutes time frame before you can start executing this trade, right? So everything I'm going to be doing next is showing you step by step how I'm going to be analyzing this all these 14 pairs, looking at for this same thing on the lower time frame down to the higher time frame. Then we can see if you spot any setup. If you don't spot any setup, we'll wait until what we are looking for form. Until then, we'll sit on our hands. So this same thing you do on higher time frame to your lower time frame, then you execute. Okay. So this same thing you look out for when you want to sell is the same thing you are going to be looking out for whenever you want to buy. Okay, whenever you want to buy on the 24-hour time frame or the weekly time frame, you go to the 4-hour time frame. All right, if you spot it on the 4-hour time frame or 1-hour time frame, you let's get down to your 30 minutes time frame or 15 minutes time frame, then you can execute. All right, now let's move on to the agendas of today. Let's analyze all the pairs and let's see what we have. Okay, now on the Deriv synthetic trading view, the highest time frame we can spot is the 24-hour time frame. So anything that has to do with weekly time frame or monthly time frame, we can't see it unless we use our MetaTrader 5. Okay, so today we have volatility 25 index. Okay, but the 25 index is bearish on the weekly time frame using that same pattern I just showed you earlier. It's bearish on the 24-hour time frame. It's bearish on the weekly time frame. But on the 24-hour time frame, we can't spot this pattern. We can't spot our pattern on the 24-hour time frame. So what do? We go to the 4-hour time frame if we can spot our pattern. And if you see it, we can start anticipating something real good. Okay. On the 4-hour time frame, still you can see that the pattern is not still clear. Okay. Let's get down to the 1-hour time frame. If you can't spot it on the 1-hour time frame, that means it has nothing currently, because we need to see it on the 4-hour time frame or 1-hour time frame before we can go down to the 15 minutes time frame or 30 minutes time frame. So first of all, you can see that we have our first rule here, which is sweep of liquidity, which is this. Okay. And then we have our second rule, which is first break of structure, which is this. And our third rule is here. Okay. And this is our fourth rule. This becomes our what? Protected high. The whole of this zone becomes our point of interest. Now, this is pure example of the illustration I just did using our trading model, the pattern I just explained. Sweep of liquidity must be a sweep of liquidity. Rule number one: price must retrace to take out the newly created low and give us our first break of structure. Rule number two: price must retrace 50% to give us our structural liquidity. Rule number three: price must retrace to take out the newly created low. Rule number four: and price must take out the newly created high, which is our structural liquidity. Rule number five: and continue to the opposite direction. Now, price has taken it out and it's in our point of interest right now. So the next thing we are going to be anticipating, remember I said when price tap into a POI on the 4-hour time frame or the 1-hour time frame, you anticipate a continuation on the lower time frame, which is a 15 minutes, 30 minutes, or 10 minutes time frame. Now we're anticipating this move. Okay. Once price give us this move like this, now we're anticipating a setup like this on the 15 minutes, 30 minutes, or 10 minutes time frame. Okay, so that we're able to take ourselves. The reason why you don't enter trade immediately on the 4-hour time frame and the 24-hour or the 1-hour time frame is because of this. Once price tap into your point of interest, you don't start selling, because why? You don't know if price is actually going to hold on this point of interest. Okay, because you might set your limit entry somewhere here and price will just invalidate it. But the fact that you wait for a lower time frame continuation or entry, there is high chance of, trading is all about probability. There is high probability that the trade is going to hold instead of you just trying to jump on it on the higher time frame. So definitely this is what price is going to do. If this price is going to hold on this POI, it's going to do something like this, and we are going to be taking continuation until price take out this target. Then we anticipate for another 4-hour structure, 1-hour structure, then we continue the trend until the weekly time frame low is taken out. Simple. Now currently we don't have anything on V25. This is what we are anticipating. Hopefully this happen. All right. Now let's move on to the next pair, which is step 100. We have step 100. Let's check it out. So step 100, we have been marking a setup on this for a very long time. It was on this, but it got invalidated. So I'm not going to be marking up, but that is why you always have to wait for the lower time frame validation. Okay. Take for example, this is the time frame we have been waiting for. We marked this on the 4-hour time frame for quite. We've been anticipating this since when price was down below here. Okay, we have been anticipating this. So this is our rule number one, rule number two, rule number three here, and then this is rule number four. This is our rule number four here, and then this point is our rule number five. The whole of these zones now becomes our point of interest. Step step 100 was bearish on the weekly time frame, smashes targets. Bearish on the 24-hour time frame, smashes target. Now it was bearish on the 4-hour time frame some while ago. It smashes the target. Now the most interesting thing is that we have another 4-hour point of interest. Look at. Let's say we set our limit entry on this point of interest. You see, we would have already hit stop loss. That is why it's always advisable that whenever you have a 4-hour point of interest, always wait for a continuation on the 15 minutes time frame. Now it's just like an extra confirmation. Okay, once you spot this pattern on the 4-hour time frame, price tap into this point of interest, scale down to the 15 minutes time frame, 10 minutes time frame. No matter how in hurry you are, always be patient and wait for your lower time frame structure to form. Then there is high probability that this trade is going to hold. So because we didn't set limit entry, we just escaped a loss. But if this has rejected from here, give us a 15 minutes continuation, there is high chances that this is going to hold. Now this POR has been validated. The next POR we are looking for now, you can see clearly we have rule number one, which is sweep of liquidity. Rule number two, which is first break of structure. Rule number three, price retrace 50% to give us what? Our structural liquidity, which is this. Okay. Rule number three, price take out the newly created low to give us what? Our second break of structure, which is this. And then rule number five, price retrace, take out this newly created low and then continue to the opposite direction, this newly created high, which is the structural liquidity, and it's expected to continue to the opposite direction. Now this is our what? Protected high. So the whole of this zone becomes what? Our point of interest. Now, if this price rejects from this point to give us a 15-minute continuation or the 30 minutes continuation, you'll be rest assured that okay, this is where price is going to be start selling from. Price is going to start selling from. This is point A, this is point B. This is the starting point and this is the finish point. So we are going to be taking series of 15-minute continuation. This same pattern that formed like this. On the 15 minutes, it's going to start forming on the 15 minutes, 30 minutes, and 10 minutes until price take out this target, which is this low. So this is what you are going to be anticipating on step 100. So until price does that, we'll be sitting on our hands. Maybe this is your first time of joining this live session. Okay, we class from 6 a.m. to 7 a.m. daily, and we basically analyze the synthetic indices market using pure technical analysis and price action. And if you are yet to join our Telegram channel, the link to join is in the description of this video, or you can check the bio of this channel. And don't forget to like, subscribe if you are getting values from this video. All right, so let's move on to the next pair, which is step 200. Let's check out step 200. So on step 200, starting from the higher time frame, which is the 24-hour time frame, you can only spot our continuation here on the 24-hour time frame. Now we anticipate price to call all the way up. So if you have been following me clearly, you will see that you have a sweep of liquidity here. This is our rule number one. Rule number two, we have our sweep, we have our first break of structure. Rule number three, price retrace 50% to give us structural liquidity, which is this. Rule number four, price take out the newly created low to give us a second break. To give us our second break of structure. Now this is our point of interest. So we're anticipating price to come into this zone, right? Give us a structure on the 4 hour time frame like this. All right, give us a structure on the 4 hour time frame like this. Remember, this is 24-hour time frame. So once price give us a structure on the 4 hour time frame, on the 24-hour time frame, tap into this POI, give us a structure on the 24-hour time frame. On the 24-hour time frame now, we'll anticipate another continuation on the 4 hour time frame or the 1 hour time frame. Then on that 1 hour time frame, we'll scale down to the 15 minutes and anticipate price to give us our sell continuation. Until then, you can start you can start selling until price take out this hourly time frame, take out this low of the 4 hour or the 1 hour. So this is what to be anticipating. It's actually going to take time to happen, but this is what you are going to be anticipating. No matter how long it takes, you're always going to be here. So from the higher time frame to the lower time frame, and then you execute on it. So let's check out the next pair, which is the 500. Starting from the 24-hour time frame, the 500 is bearish. On the weekly time frame is bearish, but then on the 4 hour time frame is doing something very important. Now, this right here is the 4 hour time frame. This right here is 4 hour time frame. So we have this strip of liquidity, which is our row number one. We have this protected high. I know some of you be asking me why is this strip of this protected high is not part of our row. The rule is that there must be a strip of liquidity to give you your protected high, or there must be a strip of liquidity to give you your protected low when you are selling. So this is just this high, this protected high is part of the rule number one. There must be a strip of liquidity to give you your protected high. Okay, now this is a strip of liquidity and this is your protected high. By rule number two, price will retrace back to take out the newly created low to give you your what first break of structure. And then rule number three, there must be a 50% retracement, okay, for the newly created liquidity, and price must retrace back to take out the newly created low to give you your second break of structure, which is right here. After the second break of structure, we have our point of interest. So this is our point of interest at the moment. Now, price take out the structural liquidity and continue to the opposite direction. What price is doing currently is that it's trying to retrace. Price is trying to retrace to the opposite direction. Now it has sold up to like almost 20% to full take profit level, and then it retraced back. Now let's check what is happening in this zone. If you are going to be anticipating any move, let's check what is happening on that zone. So on this zone, let me switch to the 1 hour time frame. If you find something tangible, on this 1 hour time frame, you can see clearly that we'll see our super liquidity that give us our protected high, which is this, and then this is our protected high. And then we have our rule number two, which is price taking out the newly created low to give us our first break of structure, and then price retracing back 50% to give us structural liquidity. And let me check if this is up to 50% using the Fibonacci retracement. Of course, it's up to 50%. Then the price give us our fourth row, which is what? Second break of structure. And this is our A plus setup. And the fifth row, price retrace back to take out this structural liquidity in order for it to continue to the opposite direction. And this zone becomes point of interest. And this is our point of interest. Okay, this right here is our point of interest. Now price needs to start coming down to the opposite direction, which is this. So what we are going to do now is go down to the 15 minutes time frame and start anticipating sales continuation until price take out this low, which is here. We're going to be anticipating 15 minutes sales until price take out this low. The price take out this low on the 1 hour time frame. So this is what we have currently on step 500. Now we're going to move into the next pair, which is V100. So let's check V100. Let's check V100 real quick. Now V100, we already have our markup already, starting from the 24-hour time frame. So on the 24-hour time frame, I already mark it out. We have our what? We have sweep of liquidity to give us a protected high, which is this. Then we have our first break of structure, which is our row number 1, row number 2 here. Price retracing 50% to give us what? Structural liquidity. And then row number 3, and row number 4, price take out the newly created low to give us what? Our second break of structure. Now the whole of this zone becomes point of interest. Price needs to tap this point of interest and continue to the opposite direction. Now let's go to the 4-hour time frame. If price has given us a 4-hour time frame structure. Now this is what is that we are anticipating. Anticipating price to give us 4-hour continuation structure on this. So if price does this, we'll take our trade. But if it doesn't, we are going to sit on our hands and anticipate what is going to happen next. But definitely, since we have this buyers on this 24-hour time frame, price can't just sell and take out this low. It's going to give us a continuation structure on the 4-hour time frame, on the 1 hour time frame. Then we can take more sales on the 15 minutes time frame, 10 minutes time frame, thereabout. Okay, so let's check out the next on our list, which is V30S. Let's check out V30S. Okay, our V30S also, I already have the marks up. Okay, for those of you that want to follow me step by step, let me just remove this and then let me go over it again. First of all, doing analysis from the higher time frame to the lower time frame is basically top-down analysis. Is understanding where price is coming from, where it's going to. Now you know that price is coming from so place and it's going to the other side. No matter how long it takes, it's going to definitely get here. Take for example, you take a bus from Lagos, you are coming to Abuja, or you take a flight from Lagos, you are coming to Abuja. No matter how long you guys stay on the road, you know that the destination is going to be Abuja. Okay, for those of you in Nigeria. So for those of you outside Nigeria, let me give you a clearer example. If you book a flight from Nigeria to come to United Kingdom or America, okay, no matter how long you guys stay on the road, you know, you need to land in other country, change plane, and then move until you get your destination. But no matter how long you stayed on the road, no matter how long the flight is, you know that your destination is going to always be that place you are going to. That is why sometimes you enter a trade in a POI, you see that it retrace, come back, and then at the end of the time, it always smash your target. That is because you already understand that no matter how long you take this trade, it's always going to hit my target. All right, so that is why it's very always important to do your top-down analysis, understanding where price is coming from and understanding where it is going to. That way, you know that what you are doing is sound and accurate. Okay, so first of all, this is the 24-hour time frame. Now you can see our row number 1, which is sweep of liquidity to give us our protected high. This is it, sweep of liquidity, and this is our protected high. Secondly, we have We have our sweep, we have our structural liquidity, we have our first block of structure, sorry, and then we have rule number 3, which is structural liquidity. Then rule number 4 comes into the picture, which is this second block of structure. Now this one becomes our what? Point of interest. Now a lot of you might be asking me that doesn't this look like as a buy structure also? This zone. You'll be asking me, is this not a buy structure? Now I'm going to be explaining why it is not valid. The reason is because on the weekly time frame the trend is bearish. Okay. On the daily time frame, price has already took out the structural liquidity first. Okay. And now the trend is bearish on monthly and weekly time frame. So trying to use this as your point of interest is always going to end up in tears. Okay, it's not always going to go well. It won't end well. If you ask me, is the structure valid? Yes, it's valid. But is the trend in alignment with this? No, it is not. So that is why we will not be taking the buy, because of we are following the trend. Based on top down analysis, the trend is what? Bearish too. So now that we have gotten our direction on the 24-hour time frame, and we know that this is the finish point, okay, price is going to start selling until you take out this low, which is this. What do we do next? We go to the 4-hour time frame and check if we have a continuation that we are going to be anticipating until price come and take it out for us. Now currently we don't have anything on the 4-hour time frame. Without wasting much time, let's go to the 1-hour time frame. On the 1-hour time frame, what do we have? We have a continuation that we are anticipating currently, which is rule number 1, sweep of liquidity to give us a protected high, which is this. Rule number 2, our first block of structure, which is this. Rule number 3, price retrace 50% to give us what? Structural liquidity, which is this. Rule number 4, our second break of structure. This becomes our what? Point of interest. Now the price needs to tap into this point of interest and start giving us continuation on the lower time frame. So this is also anticipating. Once price comes into the POI, we're going to be anticipating this move. And we'll let price. So this is basically what we're going to be anticipating. Okay. Now let's check out the next pair on our list. So this is, I'm going to be looking out for this, and anything that comes out, I'm going to be updating you guys in the community. So let's check out the next pair, which is V91S. V91S is bearish on the weekly time frame, is bearish. On the daily time frame, it's also bearish. So simply we have our first rule here, sweep of liquidity, and we have our protected high. Okay. Secondly, we have our first break of structure. Price retrace 50% to give us structural liquidity. Give us a retrace bar to take out the newly created low, rule number 4, and then our point of interest. This becomes our point of interest. So price is expected to tap into this point of interest, continue to the opposite direction. You give a 4-hour continuation here, give series of continuation on the lower time frame, smashes TP, this place to give out a 4-hour continuation here, series of 15-minute continuation and smashes TP. Okay, so this is basically what I've been saying since. There's a 4-hour continuation here. And when you scale down to the 15 minutes, you begin to see 15-minute continuation until this low was taken out. And this is another 4-hour structure. Gives series of continuation and then smashes TP. Now this is the overall TP on the 24-hour time frame. You can see that price is almost TP. So if price doesn't retrace back and give us another continuation, that means you are done with V90S. Until then, we're going to be anticipating more sales on this pair. So let's check out the next pair, which is V25-1S. Okay, V25-1S is still bullish. Like I said, we're anticipating a move to come here since. So if you have been following me, you can see that this is what I've been showing you since. The V25-1S is bullish on the 24-hour time frame, bullish on the weekly time frame as well, and this is a continuation on the 4-hour time frame. So price is expected to tap into this point of interest and then give us continuation on the lower time frame and continue to the opposite direction. So if price doesn't respect this POI, it will definitely come to this and do the same thing. Okay. Let's check out V75-1S. So currently V75-1S is bearish on the 24-hour time frame. Row number 1 here, row number 2, which is this. We have our row number 3 here, row number 4, which is this. Sorry, that's row number 3. Row number 3, second sweep with this liquidity, and then row number 4, which is this, and then row number 5. See, price has tapped into the POI and it's moving to the opposite what direction. Now, this is a finish point. This is the starting point, and then this is the finish point. Okay, this is the starting point, and this is the finish point. Now we'll scale down to the lower time frame, which is the 4-hour. If you're going to see continuation on the 4-hour, the 4-hour, there's a continuation here, which is a sweep here, protected high here, our second rows, our third rows, our fourth row, which is here, and then this becomes what our point of interest. So we're anticipating this price to come into this zone and sell. You can see that price is reacting currently from the point of interest at the moment. So let's go to the 1-hour time frame and see if price is reacting from a place that is respecting our buyers. So let's check it out real quick. Okay, from this point you can see we have rule number 1, GC for liquidity. A protected high. Then rule number 2, we have our first break of structure, and then we have our protected high, which is this. Our third row, which is price retrace 50% to give us structural liquidity. And then we have our fourth row, which is first break of structure. Now this zone is now our point of interest. So this is the starting point, and this is the finish point. All right, this is the starting point, and this is the finish point. Okay, now price is going to start selling from this point, and what we are going to be doing now is anticipating continuation on the 15 minutes time frame until price take out this target. Now let's go to the 15 minutes time frame and check if you are going to find a 15 minutes continuation. Now on this time frame, we couldn't find any 15 minutes, and for more quality continuation, we will stop at 15 minutes. Once we can spot what you are looking for on the 15 minutes, we will be sitting on our hands until price provides it for us. Okay, so currently we don't have anything on this pair. We are going to be anticipating that move until it forms. So we still have a long way. This still has a long way. Before price matches this target, it will give us a 15-minute continuation. And if this zone is not valid, okay, price will just invalidate it and come to this place to continue the move. But until then, you don't have anything to do. Just wait and see if our system is going to come up. So the next we are checking is V15 index. We're going to be checking V15 index. So on the V15 index on the 24-hour time frame, this is what we have currently on the 24-hour time frame. We don't have anything clearly on the 24-hour time frame. So you are going to be checking the 4-hour time frame. Okay, if you have any continuation that we are anticipating. Okay, currently you see that we have our first rule, which is our sweep, second rule, which is first break of structure, the third rule we have our structural liquidity, fourth row we have second break of structure, which is this, and then we have our protected high, which is this. This zone becomes what? Our point of interest. So we're anticipating the price to tap into this zone and give us continuation on the 15 minutes time frame. Like this, then we can allow price to tap into our opposite direction. So we are going to be waiting it out and see if it's going to respect what we are looking for. So we'll go to the next, which is V10s. V10s is bullish on the weekly time frame. On the daily time frame, is trying to retrace. Okay, so we are expecting a rejection either on the 4-hour time frame or the 1-hour time frame, but it hasn't really done that yet. So you are going to be waiting for it to give us a continuation pattern on the 4-hour time frame or the 1-hour time frame. So from there we can hop on any buy we see or on any sell we see. No, we are not going to be sticking with any sell right now until price take out the highest high on the weekly time frame. Then we can switch our buyers then. So for now we are going to be only be interested in buys. So the next I'm checking is V75. V75 on the weekly time frame is bearish, on the 24-hour time frame is bearish, but just take out the target. You can see, just took out the target. You have been anticipating a sell on the 4-hour time frame, but at this point, the sell is already not valid anymore. The sell is already not valid because this is already overly oversold. Okay, so we are going to be looking out for a fresh 4-hour continuation or 1-hour continuation on this pair before we have anything to do with it. So we are going to check out the next pair on our list, which is step 300. On step 300 is So 300 is bearish on the 24-hour time frame. It just smashes the target, which is this. This was the target. It just took it out on the 24-hour time frame. It gave us series of sales and then continuation on the 4-hour time frame. It just matches the target. Okay. Now, if you can see clearly, you see that we have our row number one, which is here, row number two, protected high, row number three, row number four, and then price take out the structural liquidity, continue to the opposite direction, took out the target. Now let's go to the 4-hour time frame. You are going to see what you always look out for. The 4-hour time frame, you can see clearly from here that we have our row number one, which is this sip of liquidity, row number two, which is this our protected high. So row number two, we have first break of structure. Row number three, this is our structural liquidity. Row number four, we have second break of structure, and then this is our point of interest. This becomes our this one becomes our what point of interest. Now we're anticipating price to tap into this POI and continue to the opposite direction. From there, we can begin to take continuation on the lower time frame, such as the 15 minutes time frame and the 10 minutes time frame. So this is what we're anticipating on step 300. So the next pair analysis V50 index. Okay, on the 24-hour time frame, V50 index is bullish, is bearish. All right, on the 24-hour time frame, V50 index is bearish, and this is it. We have our sweep here. We have our first break of structure, have a protected high. We have our row number three, which is structural liquidity. The price needs to take us and continue to the opposite direction. We have second break of structure, and the whole of these zones now is our what point of interest. So this is the starting point. This zone is the starting point, and this zone below is the finish point. Okay. Now let's go to the 4-hour time frame. If you can find the continuation on the 4-hour time frame. Now you can see clearly that on the 4-hour time frame, we have rule number one, sweep of liquidity. Rule number two, first break of structure. Rule number three, structural liquidity. Rule number four, we have our second break of structure. Now this becomes an A plus continuation on the 4-hour time frame. And then we have what? Our protected high. Okay, and this zone becomes our point of interest. In this point of interest, the price is expected to come into this zone, give us continuation on the 15 minutes time frame, 10 minutes time frame, until this target is taken out. So this is what we are going to be anticipating currently on V50. So you can mark it out and be watching it as well. So the next we are going to be checking is V100S. V100S. Starting from the 24-hour time frame, V100S is bullish on the 1 hour, on the weekly time frame is bullish, it doesn't smash the target. 24-hour time frame is bullish, and on the 4-hour time frame, let's check out if it's giving us any continuation that we can take. Okay, so this is the current price action that it's giving. Okay, we have our what? Sweep of liquidity. We have our first break of structure. We have price retracing 50% to give us our structural liquidity, which is this. And then we have protected low. And this becomes what? Our second break of structure. The whole of this zone becomes point of interest. Now we anticipate price to come into this zone and give us continuation on the lower time frame until it take us this target. So this is what we have on step on V100S currently. We're going to be checking the next, which is step 400. On step 400, starting from the daily time frame, daily time frame is bearish. The weekly time frame is also bearish. So let's go to the 4-hour time frame. We are going to find our structure on the 4-hour time frame. Currently, there's nothing here. If you have been following me and you understand, we don't have anything currently on step 400. Let's check the 1-hour time frame. If you find something, fortunately, on the 1-hour time frame, we don't have anything on the 1-hour time frame. So let's go. So that means there's nothing on step 400 at the moment. So let's go to the last pair on our list for today, which is V50, which is V50S. V50S on the weekly time frame, it just matches the target on the weekly time frame. So on the 24-hour time frame, nothing is really happening on the 24-hour time frame. Okay, and then on the 4-hour time frame, let's check. On the 4-hour time frame, nothing is still happening on the 4-hour time frame too. We don't have anything happening in the 4-hour time frame. So we can anticipate something like this, but it is not valid. It doesn't meet our rules. So this, no. Let's check the 1-hour time frame. If you can find something worthy on the 1-hour time frame. Currently, we don't have anything. Currently, there's nothing on the 1-hour time frame. Okay, so I think that is all we have for today. We haven't gotten any setup yet. This has been a very slow week. Sorry, is that a slow week? This is the starting of the week. So this week is going to be definitely be good. We are going to have more setup, right? So we have checked so far. We've analyzed V25, step 100, step 200, step 500, step 100, V30S, V90S, V25S, 75S, V15, V10S, V75, step 300, V50, V100S, step 400, and V50S. So these are the volatility indices and the step indices we've analyzed for today. And so far so good. We haven't gotten any setup, but we've been able to get a continuation on hourly time frame, such as the step 100, V30S, and the rest. So you can do your personal analysis, and wherever you're having issue, you can always send me a screenshot on Telegram. And if you're watching this video on replay, make sure you subscribe to this channel if you are getting values from it, like and share. And also, whenever you want to host another live session, which is every day 6 a.m. to 7 a.m., you'll be the first to be notified. Okay, so if you're wondering the broker you can use to trade volatility indices, synthetic indices, is Deriv broker. The link to register is on my description. Fast withdrawal, fast payments, everything is fast, fast, fast. Okay, so I'll see you guys tomorrow, same time, same things, same analysis, top down analysis, step by step. I'll see you tomorrow. Until then, peace and stay safe out there. So if you are here to join the Telegram community, the link is in the description of this video. Join, and that's where I'll share most of the updates with you guys, and then we learn a whole lot of things following my signals and learning directly from me. So I'll see you tomorrow, 6 a.m. to 7 a.m. Peace out.